Welcome back to the channel. Um, Thank you for tuning in. So in today's video, guys, I want to show you, as you've seen from the title of the video, I want to show you something which is very deadly in price. How to trade the ICT IFVG Reaper. This is a very deadly signature in price that I believe currently I'm the only one in this country who will teach you this publicly or even pay if there's no one selling this because they don't know it. None of those scammer boys know this. No one knows this, guys. Only a few guys knows this. How to trade the inversion 5 Reaper. So this is a very deadly signature and price. I'm not just hyping it up, guys. The Reaper is massive. Last week I was able to anticipate it live with a friend. I was watching the chat with a friend. I think it was on Monday or Tuesday. I saw the Reaper live. So this week I've decided that I want to get it on record. So this is not something that has already happened. It's right there in front of your eyes, but you can't see it. Even if you take a moment and pause the video, you can't see it because no one knows this. Only ICT and his students know this. I've been speaking about order blocks. So many times you will see me mark a candle like this as an order block. Not the most perfect one for this example, but it's an order block. That price level there will continue to have some sort of support and resistance going into the future. But I don't care about the future. I will look at, is it traded to, and then after it's traded to, I don't care about it anymore, to be honest. But that's just me. So there's order blocks. Many times you've seen me mark order blocks. This is a bearish order block. There's bullish order blocks. There's propulsion blocks. So these are different types of order blocks. There's propulsion blocks. There's rejection blocks. There's mitigation blocks, and then there's breaker blocks. So I'm only going to talk about breaker blocks for this video. So what is a breaker block? A breaker block is basically from the high, low, higher high. So we have a swing high there. Swing high, swing low, higher swing high, higher swing high. Last downward close candle is the breaker block. So we extend that in time. As you can see, price is currently trading inside the breaker block. But let me only cater for the bodies of the breaker block, just to make it more accurate. So I'm just gonna mark this gray. We're trading inside the breaker block. So this candle here, that's the breaker block. Now, in between this swing low and this swing high, we mark that range using the Fibonacci from the high there to the low. From the low there to the high, 50% is equilibrium. So I'll mark this 50% level 147275 as equilibrium. So that's equilibrium. Equilibrium. So anything above equilibrium is premium. Premium. Anything below equilibrium is discount. So all prices below the equilibrium price, those are discount prices. All prices above the equilibrium price, so all prices above 727.5 premium prices. Guys, I'm breaking down something which is so complex, so easy. It's so easy. Just listen, take your notes, but watch the video the first time listening. Just pay attention. So equilibrium between the swing high, the swing low there, and the swing high there. 50% is equilibrium. Above 50% is premium. Above 50%, below 50% is discount. Now, do we have a fair value gap here? Yes. Do we have a fair value gap here? Trick question. No, we don't. That's not a fair value gap. That's an inversion fair value gap. So that's an inversion fair value gap. It's an inverse of a fair value gap. So in retail, we have inverse head and shoulders, then we have a head and shoulder. So this inverse. It's like inverse. I don't know how to explain it better than that. So we have a fair value gap and we have an inverse fair value gap. So I'm going to mark this as inversion fair value gap. So this is our inversion fair value gap. So it's a premium. Why is it premium? Because price is currently trading below it. Wait a minute. If we have equilibrium here, anything below is discount. Why is this premium? This is why I introduced the Reaper to you. So this is a premium inversion fair value gap Reaper. It's an ICT inversion fair value gap Reaper. Why? It is a discount PD array between the swing low and the swing high of a breaker block which we are currently trading inside. Price is currently trading inside the breaker block. So between the swing high, the swing low and the swing high, high, low, higher, high, in between the swing low and the swing high, we have an inversion fair value gap which is a discount PD array. But now currently, price is trading inside the discount, but this is a premium because it is located above price. Therefore, it is a premium PD array. So this inversion fair value gap is no more an inversion fair value gap. It's now moreover an ICT inversion fair value gap Reaper. What makes it a Reaper is that we are only interested in 5 specific points of this inversion fair value gap, 5 specific numbers on the Fibonacci. So if you look on the bottom corner of your screen, I think on the right, there's infinite circles there. Those are Fibonacci numbers. Now, if I put them like this, I cater for this inversion fair value gap using the Fibonacci, meaning I look at only 5 specific numbers. The one there, which is the low of the inversion fair value gap, the high of this candle, where I start my calculation, up to the 0 there, which is the low of this candle and the high of the inversion fair value gap. I'm looking at the 25 quadrant. So I'm looking at the third quadrant, which is 25% of this inversion fair value gap. I'm looking at the midpoint, the consequent encouragement. You've heard me many times speak about it. And I'm looking at the 75 quadrant. So I'm looking at almost 5 specific levels for this PD array. Now, if I take this premium wick there, I'm going to confuse you, but I just want to quickly show you what I meant when I said look at the Fibonacci numbers at the bottom of your screen. These numbers that you see you're seeing a lot of prices. All these prices are Fibonacci prices. These are the prices which the algorithm will see and it will trade to them, or it will like react to them. Now, if I put them all over the chart, it shows you the infinite. Like it shows you that you can put this forever. These price engines can continue pricing forever. Basically, it just shows you that it's infinite, just like Fibonacci. You keep on adding to the previous number, stuff like that. But I'm not trying to confuse you, so I'm just going to quickly delete this. Let's go back to the inversion favor gap. Let's go back to the inversion favor gap discussion, the Reaper discussion. So, like I said, I'm looking at 5 specific prices. The 175 midpoint, 25, and the high end. Now, when I'm looking at an ICT inversion favor gap Reaper, I'm only interested in the midpoint, the coin square encouragement of the Reaper. What makes me interested in that is because this this was a discount array, or it is a premium array which is inside the discount. So I feel like price, once it trades to 14.7, once it prints 14.704, it'll have a big reaction to the downside. I'm seeing relatively quite lows. They might be able to breach this favorable gap and potentially rebalance this one, or even trade with the other block there. But it has already been traded to, but I feel like in terms of bodies, they might want to like trade back with this finish other block here. So watch the video a couple of times. Obviously, I'm gonna pause it, and after this, the next part is gonna be an aftermath of what's gonna happen here. Because I don't think I'm gonna record it live, so it's gonna be too long, and you get my point. So I'm gonna record after. So be prepared for what's gonna happen. Watch 14704 and let's see how it connects to it. Do you have anything more to say? No, I don't think so. The Reaper is deadly, guys. Not in this part, so I'm gonna probably have more things to say in the second part.